Hi everyone, it's me, your manuishu, and welcome back to my YouTube channel manuishu Acca Classes. In this video, I'm going to start the exam kit, Kaplan exam kit of F6, that's taxation, and it's applicable for the candidate sitting for the June 24 to March 25. Okay, so if you're watching my video for the first time, don't forget to subscribe my channel and share it among your friends, and so that they could also have the benefit, and don't forget to hit the bell icon for the more updates. Okay, so first question is, the said has made number of investment during the tax year. Okay, and so we have to tick the appropriate box which is given below, which one investment will generate taxable income and which one will be exempt from the like tax purpose. So basically the first one is 400 in shares in the company he works for. So if you are investing in the shares, in return you will get the dividend, right? And dividend will be taxable income. As we know, the individual income is classified under the three head: non-saving, saving, and dividend. So it will be taxable under the dividend income head. Second one is 1,000 in an individual saving account. So basically, in ISA, there is limit that up to 20,000 there will be no tax. So it's an exempt one. 800 in an SI investment account. So it's saying the investment account, say it means you will earn interest in return for this investment. So it's a taxable one, and interest income will be taxed under the saving income head. And last one is 500 purchasing an SI certificate. So it's already exempt category. So one thing I would like to highlight, in NSI certificate there is no limit, but in ISA, that's individual saving account, there is limit of 20,000, right? Okay, so next question. Dane and Jada are married couple. They jointly own residential property, which is let to tenant. Basically, it's their source of income. I think it's property income. In the tax year 2024, the property business income from the property is 20,000. As I said, Dane own 25% of the property, and Jara on the other 75%. No election has been made in relation to the ownership of the property. Okay. So basically, in case of the property jointly owned by the spouse, in that case, you have to make the election to HMRC. Okay. This is the percentage I'm having the ownership in this property, and this percentage of ownership is my spouse is having in this property. If you make no election, then HMRC will assume, okay, it means they are having a 50% of ownership in the property. But in our case, even though they said actually they own 25% and other 25% in owned by the other spouse, but they don't make the election, so actual ownership will be ignored and we will assume it's 50-50%. Okay. Jane earns employment income of 65,000 and Dane receives 1780 of child benefit in the tax year 23-24. Dane has no other income. Okay. So which two of the following statements are true in relation to JERA income tax liability? So basically we have to just calculate the income tax liability of JERA and identify which of the four options is correct. So as I think I have done this. Yeah, I had already calculated the income tax liability of the JERA for the tax year 2024. So I took property income. Property was 20,000. Property income from the property was 20,000, and as they had no election, made no election toward the ownership to the HMRC, so we will assume it's 50-50%. Despite of the actual ownership has been given. So, okay, it will be ignored. So we will I simply took the 50% of the 20,000 is 10,000. So Jera has employment income 65,000. I kept it under the non-saving head, and by as Jera has no other income, so we will add these two. We will arrive at the total income. So from this total income, you can deduct the qualifying interest payment. Qualifying interest payment means if you have taken the loan for the qualifying purpose, and interest paid on those loans will be considered to be a qualifying interest payment, which will be deducted from the total income to arrive at the net income. So it's a zero in our case, and we will arrive at the net income, which is same as the total income. Then we will deduct the personal allowance, which is 12,570, and then we will arrive at the taxable income, which is 62,430. So according to the first option, JERA taxable income is 62,430. Yes, it's correct. So first option we got one option. Second, Jera can reduce her income tax liability by claiming the transferable personal allowance, that's the marriage allowance. Obviously, let me give a brief little intro about the marriage allowance. So, marriage allowance basically the couple can, if both the couple are basically taxpayer, in that case one couple can donate the or transfer his or her personal allowance to other spouse of fixed amount, that is the 10% of the personal allowance, and 10% of the personal allowance is 12,500. If we will take the 10% of our personal allowance is 1257, right? But the 1260, we assume 1260. So basically, they will get the relief of 20% on this, which is 252. Okay. So, so marriage allowance, the both the spouse should be basic rate taxpayer. In that case, one spouse can transfer the personal allowance, that's the 1260, to the other spouse, and the other spouse means other spouse can save the tax up to 252 only through the marriage allowance. But in our case, what happened? This one is for the Jara, right? And for the Dane, okay. So what the saving what is the source of income for the Dane? Uh, One is the property income, right? And okay, so Dane has no other income. It will be simply 0, 0. Okay. So now Dane is, it means Dane is basic rate taxpayer, basic rate taxpayer, and it is the higher rate taxpayer. Okay. So now for the marriage allowance, both the spouse should be the basic rate taxpayer, as I said earlier. So it means they cannot transfer, means Jara cannot reduce her income tax liability by claiming the transfer of personal allowance, so-called marriage allowance. Why? Because Jara is a higher rate taxpayer, and for the to claim a marriage allowance, both should be basic rate taxpayer, right? So option B is incorrect. It would be beneficial to Jara if the couple were to make a joint election to HMRC, specifying their actual ownership in the residential property. Sorry. Okay. So option C is saying that it will be beneficial to Jara to say HMRC, okay, I own the 75% of the ownership in the property, and my other spouse on the 25% of the property. So do you think it would be beneficial? Uh, Let me check. If I will say, okay, I own 75%, my taxable income will increase. It will be up to 67,430. Earlier, it was 62,430. Okay, so by 5,000, my taxable income will increase, and so will be my income tax liability, right? So it is not the beneficial option. Okay, so last option, a child benefit charge of 1780 will be added to Jara income tax liability. Okay, so basically, child benefit is a tax-free payment from the government that can be claimed in respect of the children. But there are certain situations where it would be applicable. If individual receive a child benefit, and he or she, or his or her spouse or civil partner, or his or her partner whom she is living with, as if they were married or in a civil partnership, and has a adjusted net income of 50,000 or more. What I say, it means if the couple is married and they're having children, and their adjusted net income is above is 50,000 or more. In our case, our adjusted net income is, I hope you know how to calculate adjusted net income. We will simply take our net income, and we will deduct any donation amount to UK charity or gross personal pension contribution. In our case, there is nothing such, no such item. So our adjusted net income is 75,000, which is more than 60,000. Sorry, which is above 60,000. So it means in that case, whatever the amount receiving, amount receiving, it's 1788. So taxable charge will arise on the whatever the amount receiving from the tax department. Okay, so this is correct. So option A and D is seems to be correct. Okay, so next, in she's a sole trader during the tax year 23, she had a taxable trading income of 106,800 and receive a dividend income of 1,500. Inns made a gift a donation of 2,000 during the tax year 23 and 24. What amount of personal allowance is Inns entitled for the tax year 2024? Okay, so this one is question 3. So we will classify the all income in non-saving, saving and dividend, right? So in trading income is 106,800, dividend is 1,500, and then we will arrive at the total income. So in our case there is no saving income, so we will hide this column. Okay, so is there any qualifying interest payment in our case? It's there is nothing like qualifying interest payment in our case, so it will be 0. Then we will arrive at the net income. Okay, and from this net income we will deduct PA, and first we will deduct it from the non-saving. Why? Because it will be taxed at the high rate. So taxable income is just a second, we have to check whether our personal allowance reduce or not. Why? Because our net income exceed 100,000. Okay, so now we will check whether our personal allowance will reduce to 0 or not, or by how much amount it will be reduced. Why? Because our net income exceed the 100,000, right? So PA reviewed note 1. Personal allowance need to be reviewed because it exceeds net income. Net income exceed 1,230,000. So net income is let me add one more column, total. Our net income is less any gross personal pension contribution, less donation. But remember one thing, just limit, adjusted net income less limit then excess. This is the format. So remember one thing, when you are making a contribution to personal pension plan, or you are making the donation, that will be only the 80%, rest 20% will be contributed by the government on your behalf, right? So is there any gross special pension contribution in our question? No, they in has made gives a donation of 2,000, and that's also gross, so we don't need to grossing up. Simply we will deduct 2,000. Don't forget to gross up the amount. If already given the question, just put the amount as it is. But if the net amount is given in the question, then in that case we have to gross up the amount to deduct from the net income to arrive at the adjusted net income. So our limit is 100,000, and what is the excess amount? Excess amount is this. So reduced, so PA is 12,570 reduced by, we will just take 50% of this amount, because every 2 axes it will be reduced by 1. So revised PA is 9420. So okay, done. Okay, so basically question was asking the what amount of personal allowance is entitled to for the tax year 2024, and we got it's 9420, right? Okay, so fine. Okay, so next question is, what is the Wayne's income tax liability for the tax year 2024? Okay, Gina and Wayne are married couple in the tax year 23-24. Gaines has a salary of 5,000. So I will just edit all this. So employment income. Okay, just wait. We have to calculate income tax liability of the Waynes, right? Waynes. Okay, so Gain had salary of 5,000 and Waynes has a property income of 4,650. So it means property income, and it will be classified under the head non-saving, as I said earlier. And they have made election to transfer the fixed amount of personal allowance from Jenny to Wayne. Jenny. Okay, no issues. Our total income will be 4060. There is no qualifying interest payment. So net income will be same. Personal allowance will be, as the net income is less than 100,000, so no need to review, minus 12,570. So her taxable income will be 2808. So now income tax liability, non-saving, basic rate band. So whole amount fall under the basic rate band, right? So it will be taxed under 20%. Okay, so total tax liability is 5616. So now from this total tax liability, as the question said, they have made election to transfer the personal allowance from the Jane to Wayne, and both are the basic rate taxpayer. This one is a condition that need to be made to claim the marriage allowance. So as the both are basic rate taxpayers, so one partner can transfer their personal allowance of the fixed amount, that is a 1260, to other partner, and to yes, 1260. So whatever this personal allowance they are transferring, it will reduce the income tax liability of the other partner. As in our case, less marriage allowance, Jane will transfer the Wayne 1260, and it will be the on the tax rate apply on this personal allowance will be the basic rate one. So income tax payable will be 6 plus this, so it is 5634. So 5634 is option C. right? I will repeat the things once again. So basically, these two Waynes and Gina and Waynes are the married couple, and Gina has only the salary income of 5,000, and whereas Wayne has a property income the 40,650, right? And both are the basic rate taxpayer. We can see the both are the basic rate taxpayer, and the Jane's whole salary is consumed by the personal allowance. So there are some unused portion of the personal allowance remaining to the genie, which she can transfer to the her other spouse, his or her other spouse. In our case, it's Wayne. So see, both of them has made election to transfer the personal allowance of that's a 1260. It's fixed amount, which will reduce the income tax liability of the Waynes, right? So we calculated the as usual the up to the total tax liability, and after that we will deduct the marriage allowance provided by the other partner, and we will tax those transfer personal allowance at the basic tax band, that's a 20%, and it will save our the income tax liability by 252, and the final income tax amount payable is 5364. Okay. Okay, so now we will do last question for this video, and in next video we will continue. Tick the appropriate box to show which of the following items of expenditure are deductible in case in the calculation of individual taxable income. A contribution into the personal pension scheme. So if the individual is contributing in the personal pension scheme, it's not deductible, but certain relief will be available as I said. Whatever the amount you are contributing in the donation or the personal pension contribution, in that amount will be the only 80%. This 20% will be contributed by the government on your behalf, so it's not deductible. We will get certain relief. One is that this, like 20% contribution from the government. Other, on those gross contribution amounts, the basic rate band will increase, ANI will reduce. So these are three. So these three are the benefit which will be available in case of contribution from the personal pension contribution, but it is not deductible from the taxable income. Charitable gift donation, same case as I said for the personal allowance. Contribution in the employer occupational scheme. If you are contributing in the employer occupational pension scheme, so it will be considered to be the allowable expense, and that will be deducted from the employment income, and obviously it will reach your taxable income, so it is deductible one. A charitable donation made under the payroll deduction scheme, again it will be deducted from the employment income. Okay, so up to in this video we will do up to question number 5. In this video we will continue. Okay, so thank you so much for watching my video. Have a good day.